Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I'm Debbie Marcoux. I am the mortgage mom, and today we are going to be talking about reverse mortgage. So if you have friends or family that have been thinking about doing a reverse mortgage, if you have been thinking about doing a reverse mortgage, there are a lot of myths out there and regulations changed. So when we went through our last, financial recession and property values dropped and homes were being foreclosed, the CFPB came out and they wrote all kinds of new regulations. And it's been many, many years since that happened. But there are so many people who do not understand how the reverse mortgage works. I have a lot of clients and, friends who have called me and said, oh my goodness, my parents are going to take a reverse mortgage. I don't think that they should do that. I'm really worried about it. So most of the time, the kickback for that transaction actually comes from the children or the family of the elderly couple that is looking for the reverse mortgage. And many times what they believe the reverse mortgage is absolutely not accurate. Reverse mortgages can be great for somebody who is needing to use that asset as their retirement vehicle. So for example, I have clients right now who do not have Social Security. They do not have pension. They were self-employed their whole lives and just never built that Social Security account. So they do not receive any retirement whatsoever, but they own their home and it is free and clear. So what truly are their options? Sure, they could sell their home and they could take the cash and they could go buy something else that's smaller, and they could live on that equity that they've sold and they've taken. But they'll also pay a very hefty price in taxes for capital gains taxes if they actually sell that property and completely cash it out. So one of the options available to them would be a reverse mortgage. Reverse mortgage is great because it allows you to stay in the home. So someone who is elderly, I've got many, many clients who have called me and said, my mother is, she's got full-time caregivers and we just don't want to put her in a home. She really, really wants to stay in her property. We'd rather see her stay there, but the cost of these medical expenses are just too much. And so again, in that situation, it is a great vehicle for that person to be able to stay where they are and to stay comfortable. So, I just want to make sure that we talk about reverse mortgage because reverse mortgage can be a very good option for many, many people. But I think that we need to start with we need to start by getting rid of those myths, right? We need to talk about what those are, what are the majority of the questions that I get asked, and then I'm going to explain how they're wrong. So we're going to start there. I do want to remind everybody that this is an open show. So make your comments, put them into the feed. I will read them and I will answer them out loud for you. I can see that Chief Manny jumped on and said the Mortgage Mom is live. So that I am here. I am live. I am here to have an open discussion, to take your questions and answer them for you. So please do not hesitate to put those questions into the feed. So we're going to start with myths, okay, because there are a lot of myths. And like I said, I think we need to break those down first, and we need to talk about those. Then, obviously, if we've got time, questions are coming in, I'll start to jump into some of the scenarios where a reverse mortgage would be very beneficial for somebody. Now, a reverse mortgage is not for everybody. There are, I can't even count on 10 hands how many loan programs are out there and available. There are different types of loan programs because everybody has a different scenario. So what might be good for one person may not be good for everybody. So reverse mortgage may not be what is best for you or what is best for your parents, but it very well may be something that is good for someone else. So we're going to start with myth number one. And I had to take notes. I had to actually write down everything that I've ever heard the questions come across my desk. So I'm going to be looking down as I read them just so that I do not miss any, okay? So the bank or lender owns your home. So that is probably the biggest myth that I have heard, and that is something that many people do believe. So I do want to make sure that I squash that. The bank does not own the home. You own the home, or the person taking the loan owns the home. So the title remains in their name, whether they're in a trust, whether they are not, but they keep the home, okay? They keep title of the home, they own it. So I can see that Espolin Locos, and I think I said it right this time, says, "Hi, Mom, love your show. Thank you so much." And I do want to remind everybody, I want to take this opportunity. I switched over the notifications that you guys get when I go live to Live, Live. So if today is the first time that I've sent a text message out to the word mom, so many of you opted into mom long time ago and then never actually opted into live. So I was trying to kind of cut back so that I wasn't text messaging people that did not want to hear from me, that did not want to know that the show was live. But I have since then been getting lots and lots of emails and text messages. Hey, are you not doing your show anymore? So I do want to remind everybody, I'm not going to do this every week, but it was good to kind of mix it up a little bit and make sure that those that want to see the show continue to see the show. So make sure that you opt yourself back in. Text live, Live. So you can reply to the email that you received, or you can reply to the text message that you received from me today, just with the word live. Or if you've never seen the show before, but you do want to be able to watch me each week, and every week I come up with a different topic, then text the word live to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So Espolin Locos, I have not seen you on for a really long time. So that's what actually made me think about sending out that text message. So my dad jumps on, says hi. So my dad is my biggest fan. So Dad, thanks so much for joining. And okay, so let's talk about this. The bank or lender owns the home. So again, if you're just jumping on, we're talking about reverse mortgage. And I'm going to jump into myths first because I want to make sure that things that people think, that we make sure that we understand what's actually true about reverse mortgage, because reverse mortgage can absolutely be fabulous for somebody that needs to use that home that they own as their retirement vehicle. So you retain ownership of your home with a reverse mortgage, just like with a traditional mortgage. The lender places a lien against the property, just like a regular mortgage. They do not own the home. So that is the number one first myth that we are going to bust. You own the property. When you pass away, your heirs, whether you have a trust set up or a will set up, but your heirs, or they have to go through probate, but their heirs actually have still the opportunity to inherit that home. So no, you do not lose ownership to the property. So myth number 2, your heirs will be responsible for repaying the loan. So this is huge. This one comes up a lot. Reverse mortgages are non-recourse loans. And I get that question a lot. Recourse, non-recourse. They are non-recourse loans. So if your parents if you're watching this because you've been thinking about a reverse mortgage, if you own more than what the home is worth at the time of your passing, your children can actually have an appraisal done on the property, and they will never pay more than what the appraised value is. So you could owe $4 million on that property. But if that property is worth $1 million, the children or the heirs or whoever is in line to inherit the home can actually purchase the property for what it is worth. So it is non-recourse. Now, they can choose not to purchase the property. They can literally choose to let it go back to the bank. That is their choice, but they are not responsible. They are not on the hook to make those payments or to pay off that loan. They are not responsible. So that is a big one that comes up with a lot of questions. And so I wanted to make sure that I knock that one out of the park. All right. Myth number 3. Let's see. You'll be forced out of your home. So reverse mortgages, particularly home equity conversion mortgages, are designed to help seniors remain in their homes for as long as they live there. You can't be foreclosed on as long as you fulfill your loan obligations, such as paying property taxes and insurance and maintaining the property. So one thing I do want to make sure that you guys know is that there are no payments that have to be made on a reverse mortgage. So you might be thinking, well, then how could I default on my loan obligations? You are responsible to still pay your property taxes and your homeowner's insurance and to maintain the property. So if the property is starting to fall apart, it needs a new roof, it needs new stucco, whatever the situation might be, you are responsible to maintain that property. So in that situation, you would not be fulfilling the terms and they would have the opportunity to foreclose on you. But as long as you keep your home in good shape and you continue to keep your home insured and your property taxes paid, HOA dues paid if you have them on your home, you will not lose the property. So I can see that Josie got on. She says, impeccable time for this subject. Thank you, Debbie. And Why Not gets on and says, does this information count for mobile homes as well? Tom Schwade says, a reverse mortgage is the sweetest thing spouses can do for each other. Schwade, I haven't seen you in forever. So Tom, thanks so much for jumping on. You guys, I love Tom Schwade. He is a loan officer just like me. We have worked together many times in the past, and I haven't seen him jump on in a long time. But Tom is absolutely correct. A reverse mortgage really, truly is a gift. It is not a negative thing, and many people just don't understand them. So that is why I'm trying to shed some light on today in this show. And Why Not's question was, does this information count for mobile homes as well? I'm actually not going to say yes or no. I do not know the answer to that question. I have not yet, in all of the years that I've been doing these, had somebody that called me that had a manufactured home. A mobile home is different than a manufactured home. So I can tell you that on mobile homes, the answer is going to be no. Mobile homes do not get the same type of financing options. They don't have the same loan programs as residential properties. Residential properties are manufactured homes, which are basically the same as a mobile home, but they have actually gone through all of the permitting process and they've gone through all of the paperwork with the county and the city to actually turn it over from being a mobile home to a true manufactured home. They get their HUD tags, they get rid of their license plates. But I've actually never had somebody call me that was interested in a manufactured property. So I will actually look that up. And if you want to send me an email, or anybody that is watching this show wants to send me an email to get the answer to that question, please feel free to do so. You guys, I am so open and I'm happy to answer every single person that reaches out. So you can either email me at Debbie, Debbie, at mortgagemomradio.com, or you can go right to my website, go to mortgagemomradio.com, and you can click on the Contact Us button and you can send me an email right through the website. So let's keep going, though. That was a great question, and I will get an answer for you. Send me an email or go to the website, somehow contact me, and I'll answer that for you. He says, my father lived in a park and passed in February, so I'm wondering. So if it is a mobile home in a park, no, a reverse mortgage is not going to be able to be done there. That actually requires true mobile home financing. That is a mobile home lender. I am not a mobile home lender. They may have similar loan products. I don't know. I don't know enough about mobile home financing to actually tell you. But if the property is located in a park, 9 times out of 10, it is not a manufactured home. So it is not truly considered residential property or real property. All right. So next myth, and keep them coming, you guys. I love it. I love the questions. Please keep putting them in in the comments. I will read them out loud, and I will make sure that you guys get your answers. Okay. So next myth, which we started, you will be forced out of your home. So you will not be forced out of your home. I did explain that you need to make sure that you keep your property taxes paid, your homeowner's insurance paid, and the property in good shape. Maintenance is important. But as long as you do those things, you will not get kicked out of your property. It doesn't matter if the property, if the real estate market crashes and property values come tumbling down. It doesn't matter how much you owe on the property or how much that the home is worth. You are going to stay there until you pass. Now, if you are married, you and your spouse, whoever passes last. So where Tom made the comment in the section where he said a reverse mortgage is the sweetest thing spouses can do for each other, what his point around that is let's say that the two of you have, you're living there and one passes away. That is one less burden for your spouse to have to take on. There's no mortgage payment. They don't have to sell the home. They don't have to move. That reverse mortgage stays in place until both borrowers on the property have passed. Once they pass, like I mentioned a little bit earlier in the show, your heirs, whoever will actually be inheriting that property, have 6 months to get that property either refinanced or sold. So, it's not overnight that you passed away and all of a sudden the bank wants things done right now. They give them 6 months to get that in place. Many times when you get to that 6th month, if you need a little bit longer, you can call the lender, the 800 number on their mortgage statement, and you can request an extension. And most mortgage companies will give you an additional 6-month extension. Not all, but the majority of them will work with you on that. If the home is upside down, they owe more on it than what it is worth. When you contact that lender, that is when they're going to discuss getting an appraisal on the property and then how much could you buy it for if you wanted to. If not, if the property is way more is owed on it than what it's worth, you do not want to buy that property. You don't care to take it over. There's no sentimental value there for you. Then you just let the bank take it back and you let them know that you have no, there's nothing that you want there. So they can just go ahead and foreclose and keep the property. All right. So let's keep going on these myths. And again, I welcome all of you to put your questions or your comments into the feed. Please ask if there's anything that I say that doesn't make sense. If it is a mortgage or a loan question, throw it in there. I am happy to answer your questions today. So the next myth is you won't have money left to leave your children. Okay, so let's talk about that one. So while interest and fees accrue on a reverse mortgage, which we'll talk about how that works, your home's value may also appreciate, leaving remaining equity for your heirs. They can choose to repay the loan and keep the home or sell it and retain any leftover proceeds. So let's talk a little bit about that. Here recently, over the last 4 years or so, 5 years, we have seen an unprecedented amount of equity. People are gaining. The appreciation has been amazing for property, for real estate property. So in the market that we've been in, if somebody was in a reverse mortgage and their property was continuing to gain equity year over year, although their balance is continuing to increase, they're not necessarily losing a bunch of equity. Their equity percentage was probably staying very similar. Now, do I think that we're going to continue to appreciate, homes are going to continue to appreciate at the level or the percentage that it has been appreciating? No, I don't. I do think that we're slowing down. I think you guys are starting to see home values level off and in some cases even drop just a little bit. Do I think that that is going to continue? I do. Do I think that we're going to see some major real estate crash coming our way? I don't. I still don't think that we have enough housing out there. We don't have enough listings out there. for home values to absolutely crash. But I do think that they needed to level off. And I do actually think that they need to come down a bit. I think that we need to bring some home values down. So if you were to ask me, I would say that I would expect about a 10 to 15% decrease in home values over the next couple of years. That is, I don't have a crystal ball. Nobody does. Everybody can just give you an opinion. And that's exactly what they are. They are opinions. But if you were to ask me, I think over the next couple of years, we'll see home values probably drop about 10 to 15%. And then I think that we're going to be on our way right back up again, starting to accumulate that appreciation. So that's just my thought. But you don't necessarily just lose all of the equity in the property. So let's talk. Oh, we had some hair here. We got to fix that. All right. So let's talk about exactly how does that work. So a lot of people are very familiar with a forward mortgage, which most people think is a mortgage, right? So you get a loan, you make a payment. Every time you make a payment, no different than your car loan, your balance goes down. It's a 30-year term. The majority of the time, that's usually what people choose because it is the lowest payment. So all of the payments are kind of stacked with interest at the beginning of the loan, just like your 5, 6, or 7-year car loan. You pay almost all interest at the beginning. And then when you get to about year 3 in that car loan, you start, making a dent towards the balance that you owe. Mortgages are very much the same, but you are making a payment and balances are dropping. So when you think about a reverse mortgage, if you are not making a payment, which you can make a payment, that is your choice. But if you think about it, if you are not making a payment, instead of your balance going down, your balance is going up. So there is still interest on that loan. So that is where a lot of people get very confused as well. A bank is not going to just hand you over $4, $5, or $6, or $800,000, depending on how much that you are taking out with this reverse mortgage, and not charge you interest on the money. They are. Now, they're not going to charge you a monthly payment that you're responsible to make, but they have to get their interest somehow. So every single month, your balance is going to go up rather than come down. So just make sure that you understand that, yes, you're going to owe more on that property if you never make a payment once you take that loan. But again, for somebody that maybe doesn't have any Social Security or any pension or any 401k, they don't have that money coming in to live. They don't want to go and sell the property and take on the capital gains. They want to stay in their home. They want to remain in their home. A reverse mortgage is a great opportunity because you're using the property as a vehicle towards retirement. You're getting rid of a mortgage if you have one, or you're cashing out money if you owe it free and clear. You've got cash now in the bank that you can use for living expenses. You have no monthly mortgage payment that is due every month. So it is a really great vehicle depending on what your situation is. So let's jump into the next myth. Let's see. You must own your home free and clear to qualify. So that is absolutely inaccurate as well. You can get a reverse mortgage even if you owe money on a mortgage today. So let's say that you owe $300,000 on your mortgage and your home is worth $900,000 or $1 million. And I'm just throwing numbers out there, guys. If there's a percentage or a particular situation that you want to know if it would work for you, again, please just reach out. Go to my website, go to mortgagemomradio.com, click on the contact us button, send me a message. I will respond to you. Send me an email, debbie@mortgagemomradio.com, or you guys can send me a text message. So the same place that you got your reminder that there was a show today, you can text me there. It's not a big deal. You want to know when I go live every week? I want you to know when I go live too. So text the word live to 844-935-3634. That's the same phone number to call my office. You guys have all the ways to contact me. So if you want to know a particular situation or scenario, just reach out and I'll let you know. But let's say that you owe $300,000 and the property is worth $8-9 million. You absolutely could get into a reverse mortgage. There may not be enough equity there for you to be able to pull cash out, but they could pay off the loan that you have and then set you up with that new reverse mortgage so that you are not responsible to make a payment moving forward. So it is very realistic for somebody that has a mortgage today to be able to get into a reverse mortgage. Now, I want to make sure that I'm very clear on this. Reverse mortgages are typically for people that are age 62 and over. We do have programs available for 55 and older. So if you are not 55 or 62, a reverse mortgage is not going to be for you. But this is a very beneficial show because you may have parents or grandparents who are over those ages who would qualify, who this might be something that would be fabulous for. So why not ask, is a reverse mortgage something to do when you're at retirement age as opposed to your 40s? So actually, even right before I read that, that's where I told you guys ages. So a reverse mortgage is for somebody 55 and older. A lot of the products are looking for them to be 62 and older. So yes, again, as I mentioned at the beginning of the show and numerous times now, this is a fabulous retirement vehicle. So you own your home, you've paid on it all these years, your balance has come down pretty low, it's not fully paid off yet, you have fully paid off the house, you don't necessarily have enough that's getting paid to you in pensions, Social Security, 401ks, like that retirement fund that you were able to build is just kind of lacking. This is another great vehicle to help you retire more comfortably or not have to leave your home. If you need full-time care and you don't want to put, you don't want to go to a home or you don't want to put your family members into a home for full-time care, this is a fabulous way to go about it. It's a really great vehicle for all of those options. Okay, so next myth. Again, you guys, keep those questions coming. I absolutely love it. I am streaming on TikTok. I'm watching. I'm actually, if you guys are watching me, I'm actually streaming on YouTube. That's where the majority of these questions are coming in from. That is kind of my main platform. I'm also streaming on Facebook as well, and then also on TikTok. I am watching for questions. I have not seen any questions come through on the TikTok platform. I have not seen any questions come through on the Facebook platform. All of the questions are coming through on YouTube. But please, if you guys are on any of those platforms, feel free to put in your questions right into the chat. I will read them and I will answer them for you. Okay, so next myth. Here we go. A reverse mortgage is only for people in financial distress. So I think that with everything that I've talked about till now in the show, I think you guys are starting to understand that that is not what it is for. It is for people that need to have a little bit of extra help retiring comfortably. And it's utilizing your home as one of the vehicles of retirement. We talk all the time about how you want to be able to have multiple vehicles for retirement. If your job offers you a 401k, put a percentage of your check in there. If you can afford to put into an IRA, put money into an IRA as well. You're going to want to have stocks. You're going to want to have bonds. You're going to want to have real estate. You're going to want to have hopefully a pension and then also Social Security. You need to create multiple vehicles to have that retirement comfortable. But you know what? Sometimes life just sucks and you don't get the opportunity to create all of those vehicles you needed. But you did own a home. You did buy a home. You paid into that home all of these years, and you have the opportunity to utilize that property to make your retirement more affordable or more comfortable. Nicholas got on and said, joined in late. What's a reverse mortgage? So quickly, a reverse mortgage is for somebody who is 55 years old or older. So this is going to be for anybody in that age bracket or their parents or grandparents. And it is utilizing the equity of your home to stay in your property with no mortgage payments. Yes, you're responsible to pay your property taxes, your insurance, and continue to maintain the property, but they don't necessarily need to leave the home and they don't need to make a mortgage payment on the home. So we've been going through how it works, and basically we're going through myths right now of what people think a reverse mortgage is and what happens with a reverse mortgage versus what it actually is. So thank you for joining. I appreciate it. Love the comments. Keep them coming, guys. Any questions that you might have. Lori says, hi, I have been thinking about it. So, Lori, this is a great show and definitely something that we can talk about on the side. Again, remember, you need to be 55 or older. Most of the home equity products, their home equity conversion, they call them HECMs, which is a reverse mortgage. Most of them want to see that you are 62 or older, but we do have reverse mortgage products that will go down to the age of 55. Talking about the ages real quick, guys, the loan amounts that they will give you are based on age. So the average age, which I actually pulled this up for you guys. Let me see if I can find it quickly, and I might not be able to. Here we go. So the average life expectancy in the U.S. is about 78 years and 81 for women. So men 78, 81 for women. So that is the average life expectancy. So when they're looking at how much will they give you in a loan, they're looking at what is your age today, how many years will the bank, right? So when I say they, I'm talking about the bank, the lender. How long will they be holding this note? How long will you be adding to your balance? Basically, what's your life expectancy and how old are you today? So if you are 78 years old, or your parents or your grandparents are 78, we're going to be able to give them a higher loan to value against the property than we can somebody who is 55, 60, or 62, 65, right? So the amount that you can actually draw against the property is based on your age. So keep that in mind. But that was a great question. All right, here we go. Another myth. I just love these. These are great. I'm so happy I prepared. You can't sell your home with a reverse mortgage. So that is absolutely incorrect. Yes, you can sell your home. You can put it on the market. You can sell it. You own the house. The bank does not take the title. So one of the first myths that we went over when I started the show here, not 30 minutes ago or so, that you own the property. So let's say that your property is worth, again, $1 million. You took a reverse mortgage for $200,000. You've had the reverse mortgage for 3 or 4 years. You now owe $250 or $275 on the home. You own the home. You can put the house on the market and you can sell it. You can decide that the reverse mortgage was not the option that you wanted. You think that your balance is going up too fast. This just isn't what you thought it was going to be. Like whatever that the reason is, you own the home. You could turn around and take a new loan. You can get a brand new mortgage. You can refinance just like people refinance every single day. You can pay off the balance that you owe, get into a new mortgage, start making mortgage payments, list the house for sale, sell it. The difference between what you owe and you pay off is what you keep in equity in your pocket. So again, that is a big myth that is absolutely not true. All right, next one, myth. This is a big one, and this does come up. Your Social Security and Medicare benefits will be affected. So reverse mortgages generally don't impact your Social Security or Medicare benefits. However, if you received needs-based programs like Medicaid or supplemental security income, managing the loan proceeds carefully is essential to maintain eligibility. So let's talk about that a little bit. So is your Social Security, which is your retirement Social Security, is that going to be affected? No. Is your Medicare going to be affected? No. Okay, now, Social Security, supplemental Social Security income, so for disability, that could be affected because a lot of those programs are based on need and based on whether you have assets or not. So when you all of a sudden have, if you go and you take $500,000 out of your property, you have $500,000 sitting in a bank account, now all of a sudden you don't qualify because it's needs based. So you do want to look into that a bit. You want to make sure that you're working with an attorney or somebody, if that is your situation, to make sure that you are not going to hurt yourself in any way. A lot of times, too, the Medicaids and the supplemental Social Security income are sometimes also offsetting care and things of that nature. So if you have the money available for the care, then you may not need that help. So again, make sure you guys really do look into that one. But if you are just retired, you have Social Security, you get Medicare, you have your pension, you're fine, guys. It's not going to change any of that. Nothing is going to change. All right. Next one. Reverse mortgages are too expensive. So while more reverse mortgages have upfront costs, many can be financed into the loan, reducing the out-of-pocket expenses. So number one, all of the closing costs if you are doing a refinance. So yes, there are reverse mortgages that you can get by purchasing a property. So we can talk about that if you're interested. But the majority of what we've been talking about today is somebody that owns a home, that's owned the home for a long time. We're doing a reverse mortgage so that we can get them either out of the payment that they're in, or we can get them some cash out of the property and keep them from needing to make payments. So you, in that situation, in a refinance, are not going to bring any money in to close. It's all going to be included in your balance, just like if you refinanced a home, just a normal refinance process. So the only time you're going to bring in money for a reverse mortgage refinance is if you didn't have enough equity to pay off the loan that you need to pay off, right? So if you currently have your loan with XYZ lender and your balance is $400,000, but the maximum loan amount you can get based on your age is $380,000, then you would be responsible for bringing in that difference and those closing costs. But if you have the equity available, you're not going to bring any money in out of pocket. So I hope that explains that part. So let's talk a little bit about a purchase, a reverse mortgage purchase, since I just brought that up. So there are clients that have come to me that have utilized reverse mortgage for a purchase. So when would they want to do that? So let's say, for example, you own this big home. You are retired. Kids have all moved out. You don't need it. Your goal was, hey, I want to go get myself a smaller, 2-bedroom, 2-bath home, or I want to get a condo or a 1-bedroom, whatever that it might be, but you are ready to downsize. You don't want the maintenance of the backyard. So that's why you're looking at condos. Like whatever your reason is, you want to downsize. That is awesome. Put your home on the market, sell the property. Again, this is not a show about capital gains, so that we could do another day. But honestly, capital gains is really a CPA question, or your tax advisor, whoever does your tax returns for you. That is really a question for them. But let's just run through this scenario of somebody that wants something smaller and wants to sell. So you put the home on the market, you sell the property, you take your proceeds. Let's say that you walked away with $700,000 in cash. You're going to go buy this condominium for $400,000. Well, maybe part of your retirement vehicle is that you did not want to continue making mortgage payments. Like you want to get into this smaller place, but you also don't want to give up your cash. So you could, in that situation, purchase the next property, bring in what is necessary to get to your loan to value based on your age. So again, if you are 67 years old, and let's just pretend they'll only go to 50% loan to value just for purposes of being in studio, and it's an easy number. You want to buy the condo for $300,000, and now the maximum loan amount you can get for a reverse mortgage is $150,000. So you bring in the $150,000, they give you the loan for the $150,000, you buy the condo, you pay your property taxes and your homeowner's insurance, your HOA dues, and you maintain your condo. You have no mortgage payment, and you've got that extra $150,000 still in the bank. So can you do a reverse mortgage purchase? Absolutely. Totally an option and something that you can do. All right. So I went through the majority of the myths that I thought were really important. I kind of made little notes on those ones. I do want to quickly, just one more time, explain What is a reverse mortgage? It is literally exactly opposite. So think about yin and yang. When you're young and you go out and you buy a house and you take a mortgage and you put on, you put your down payment, you get a monthly payment. The monthly payment is making payments towards the balance that you owe. A reverse mortgage is doing the exact opposite. Every single month, because you're not making a payment, your balance is increasing. So you're no longer making a payment. There's still an interest rate on the loan, and now your balance is going up instead of coming down. I can see that Michelle jumps on and says, is it same processing time between reverse and refi? Are loan fee and loan commission the same? So that's a great question, Michelle. So the loan processing time, it depends on you. So if you have a difficult situation, the person that owns the house, let's call it a grandparent or a parent, is not mentally capable of making decisions, and you are the family that is looking to come in and get a loan against their house because you want to leave Granny in their home and you want Granny to stay there with care instead of going into a care facility. Now we're talking about power of attorneys. Now we're talking about, looking at trusts. Now we're talking about doctor's notes to tell us whether or not they are capable of being able to sign their own documentation. So in that situation, it could be something that does take a lot longer than a standard mortgage closing. A mortgage closing of, 30 days is basically average for a reverse mortgage, start to finish. But in those situations, it can take longer and it can be difficult. The fees on the loan are actually set by the reverse mortgage lender that is doing the loan. Those fees can be more expensive than what a traditional mortgage would be. They are going through a bigger process of getting things set up. So making sure that for example, if property taxes and insurance hasn't necessarily been made, payments haven't been made on time in those categories, or credit isn't necessarily stellar. So something that I can also say that isn't quite necessary is you don't have to have perfect credit for this program, which is great. But your credit is going to determine if you need to have what's called a LISA account set up. So we have to take part of the proceeds of the money, put it to the side to pay for property taxes and homeowners insurance because they're concerned that there hasn't been a great payment history there, showing the ability to be made on time. I could see actually on TikTok, yay, I got my first comment. So Pris jumped on and she sent me some roses and some hearts. So thank you, Pris. And she says, Debbie is the best lender. So Pris, I love you. Thank you so much. And you are my very first comment on a TikTok live. So I love it. But back to Michelle. So yes, the loan fees are going to be a little bit more expensive than a traditional loan. The time, depending on the difficulty of the file. So if they're, let's say you've got a married couple and they're in their, 50, 60, 70s, they're not dealing with maybe Alzheimer's or, something related where cognitively they're impaired. Whether the home is in the trust or not, it doesn't matter. They are the ones making the decisions. They're the ones that are signing the documents and the paperwork. Absolutely a normal transaction that could close in 30 days. So that was a great question. I absolutely love it. And thank you so much for bringing that up. When you guys ask me questions, I'm getting you the information that you need to know. I want to make sure that I answer those questions. And this show, Reverse Mortgage, is really complex. It's in depth. There is a lot to reverse mortgages. So we could do this show. I could talk about reverse for like 2 hours. I don't think any of you guys want to watch me talk about reverse for 2 hours. But I do want to give you a really good general overview. And I want you guys to know that if you've been thinking about doing a reverse mortgage, if you have friends or family that you feel might benefit from them, if your parents have talked about it and you just initially kind of shot back no because you were worried that, they're going to give the house to the bank, you're not going to get anything if they were to pass, they're going to lose all their equity. Please set up an appointment and talk to me. I will go over each individual scenario with each person that has that question. I am more than happy to do that with you guys and to help you to understand the program better. It truly is a phenomenal program when it comes to helping somebody that needs it. And again, either making retirement a little bit more comfortable, making retirement possible, or taking care of an elderly parent that you don't want to send to a home. You want them to stay in their house that they've lived in all their life. And that's where you want them to be comfortable for their final days. This really is a great product. Nicholas said, hey, Debbie, I had to do a remodification during COVID and take out a silent loan. For the reverse mortgage, help me out with that and help me start over again. Okay, so a lot of people during COVID, I'll kind of explain his question a little bit clearer. During COVID, a lot of people put their homes on forbearance or deferment. They didn't make payments during that time. You know, things were shut down. They weren't working. They couldn't afford to make the payment. And the mortgage companies were handing out these deferments and forbearances like they were candy. If you asked for it, you got it, even if you were still working and you didn't need it. So there are a lot of people out there that did use a deferment or a forbearance during that time. So Nicholas, you are among millions that took advantage. Whether you need it or not doesn't matter. You did it. And now, great question. So what happened at the point of the loan needing to be repaid was that amount that didn't get paid during those months that payments weren't made, something needed to happen. So the mortgage company either needed to modify the loan, which most people did not do. Most mortgage companies did not do, because at that point in time, interest rates on mortgages were 3-4%. Interest rates were very low. And so to do a modification and to go into a higher rate and a higher payment to combine what you owed with the balance that you owed didn't really make sense. So most of the mortgage companies were taking the dollar amount that you owed, let's call it $30,000, $40,000, $50,000, and they were just giving you, it's not a silent second. It's actually a second. It will come up on title. It may not come up on title, but it is part of your mortgage. So when a payoff demand is owed, then or ordered, when a payoff demand is ordered, that dollar amount will be part of the payoff demand. So although your mortgage remained the same, you see the balance that you owe on your mortgage statement is the same, everything is the same. When a payoff is ordered, that amount that you owed for that second through those years is going to get added to that payoff. You're going to owe it. So with a reverse mortgage, yes, a reverse mortgage is going to order a payoff demand, and they need to make sure that they get the entire amount paid off that is owed. Nothing's going to be waived. Nothing's going to be negotiated. You're not going to be able to settle it for less. But yes, with a reverse mortgage, think of it exactly like a regular refinance. It's no different. If I was refinancing your loan today, Nicholas, and we ordered a payoff demand and that balance for that deferment or that forbearance second is there, I have to pay it off. So I need to give you a new loan that is big enough to cover the total balance on the house that you owe. And the reverse mortgage would be exactly the same. So great question. I love it. You guys keep them coming. This is fabulous. So I'm just going to go through a couple of more things that I pulled. And then if I don't see any other questions come in, then we'll end the show. And again, if you've got friends or family that you think that this might be something that they should look into, or your family has been looking into it and you want to get more specific about your situation, go to my website, go to mortgagemomradio.com, click on the contact us. When you send a message, it's coming directly to me. I'm going to be the one that responds to you. We can jump on a call. We can do whatever you need to make sure that we get you comfortable with how it works and what it is. Now, one more thing I do want to remind everybody now that we're getting later into the show is that many of you guys got a text message today that I am live, and you had never gotten that text message for the last couple of months. And you've probably been thinking, like, what is she doing? Well, guess what? I've been doing a show, but I have been sending the text message out to everybody who actually opted into the word live. If you got a text message today and you haven't gotten one in a couple of months, it's because you haven't opted into live. So you opted in originally to mom. So I used to tell everybody, text the word mom to 844, right? But we're now using live because I did want to try to, some people are really motivated, want to buy a house. They watch the show. They've watched it for years. They finally pull the trigger. They get their financing. We close them up. They're all good to go. And then they get the text message and they're like, I don't need to know about this anymore. I'm not interested. So I don't want to text people that don't want to know that I went live. So I restarted a new chain of people that are getting text messages weekly when I do go live to make sure that only those that want to know that I'm on are getting the text message. So if you want to make sure you're getting the text message and you've missed it the last couple of months, you've got to respond to the text that you got today with the word live, LIVE, and that will make sure that you get a text message every single week. Or if you've never opted in before, this is the first time you're joining the show and you want to watch me live, it's the easiest to get a text message. We all know that. I get YouTube notifications all the time. They come in after the thing already finished. I totally miss out on it. So if you want to know when I go live, I send a text message literally within a minute of me starting the show. So text the word live, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. All right, so couple more I'm going to jump into, and then we'll shut the show down for the day. And that is the same number to call me. So if you want to get me on the phone, call that number, 844-935-3634. Okay, so unlike traditional mortgages, there's no set term length for the reverse mortgages. Like any loan, they have to be repaid eventually. But as long as borrowers meet their loan responsibilities, paying property taxes, homeowners insurance, and for home maintenance as usual, reverse mortgages don't have to be repaid until the borrowers permanently leave the home. Okay, so that is one more thing that I do want to make sure that is very, very clear. A reverse mortgage is for an owner-occupied residence. It is for your primary residence only. So if you get a reverse mortgage against a property and you're living there, fabulous. There is no set amount of times. You could live till you're 120 years old. They cannot make you repay that loan. They cannot force you to sell. They cannot force you to move as long as you've maintained the property, paid your property taxes, and your homeowner's insurance. If there's an HOA, you've paid that too. However, the minute that you leave and it's no longer your owner-occupied residence, you cannot keep that loan. You need to either refinance it with another mortgage product, so a forward product like you would have on your loan today, a 30-year fixed rate mortgage where you've got a monthly payment because you've left that home and it is now a second home or an investment property. A payment needs to be made. A reverse needs to be paid off. If you pass away, it has to be paid off. So your heirs are going to inherit the property. They are going to be able to sell the home and pay the loan off, keep the difference in the proceeds like we talked about earlier in the show. They could choose that they don't want the house at all and they can let it go back to the bank. If they owe more on the house than what it's worth, they can get an appraisal done and they're going to buy the home for what the house is worth. They do not owe all that difference that maybe the house is upside down for. So lots of options there. But the minute that it is no longer the owner-occupied property for the person or persons on the mortgage, you no longer can have a reverse mortgage. So Pris asked, is there an age minimum? So yes, there is. Most reverse mortgages are 62 years old and older. We do have reverse mortgage products that will go down to 55 years old. So, but yes, there is absolutely an age minimum. And my dad says, gotta go, bye, great show. So you're welcome. Thanks, Dad. You're always my biggest fan. Love you. So yes, there is an age minimum. So again, this is a retirement vehicle. This is a way to make life more comfortable using your asset as one of the vehicles that you use for your retirement. This is not for somebody who is still of working age, not of retirement age. Okay, so let's see if there's anything else that I feel is really important that you guys need to know. And then I will let you guys reach out to me directly so we can talk about your situation personally. What if your family doesn't want to sell the house? Okay, so here we go. If your heirs want to keep the home in the family, they can choose to make arrangements to pay off the loan themselves. But it's important to remember that in this instance, the full amount of the loan has to be repaid, even if it exceeds the home's value. So this is one of the myths that I'm talking about. I wanted to read that to you guys. That is not true. If you pass, now this is if you don't pass, okay? So this is where people get confused. They read things and they think that it means something different. You want to sell the home. You owe more money on it than what it's worth. Your kid wants to buy the house from you. They have to pay off the loan that you owe. You're still alive. But in the situation that you have passed and the home is upside down, then that is when the appraisal kicks in and they can buy the home for what the home is worth. So Lori says, can you ask for enough to have your HOA taxes and insurance all combined with the money that you get from the lender? So there are ways to do that. Like I said, that they do have LISA accounts where you can have money set to the side for that. Home equity loans, reverse mortgages. Most of the time people are actually pulling out cash and they're putting that cash into a savings account that is basically set aside to cover those expenses. And then now they have the home that they're living in with no monthly payment. So lots of ways to go about that. But yes, you can do that. The bank is not going to make those payments for you, but there is a way to put that money to the side so that it is there for you when the bills are due. Nicholas says, is the reverse mortgage on the original APR when you first purchased a home or on a new APR? Great question. So a reverse mortgage, you got to look at it like this, you guys. If you have a mortgage today and your interest rate is 4% or 3%, or some of you 2%, and you need to pull cash out of your house and you call me and you say, I want to look into doing a refinance because I got to get some debt paid off, or I want to improve my home, I want to do some work to the property, whatever the situation is, for the reason that you need to do that, that is considered a refinance. If we are paying off the current loan that you have on your house, you are getting a brand new loan with a brand new lender. The product of that loan is a reverse mortgage, but it is a refinance. So no, you are not going to keep the same interest rate that you have today on your current loan. You are doing a refinance. You are subject to the current interest rates at the time that you do the reverse mortgage application. So yes, interest rate's going to go up if your interest rate was low, and you are doing a refinance. You're paying off the old loan and you're taking a loan from a brand new lender. So great question. Great question, Nicholas. I appreciate that. So I think that I have, for the most part, answered everybody's questions so far. I don't have anything else that I think that I pointed, I kind of wrote down a whole bunch of notes that I thought was super important to know. But again, if you guys have specific questions, please feel free to reach out to me. Go to my website, go to mortgagemomradio.com. Send me a message. There's literally a contact us. Send me a message and I will get the email and I will respond to you. You guys are more than welcome to call my office. So the same number to opt in to get the link to join is the same number that you call the office. So again, it's 844-935-3634. You guys can text the word live to make sure you know when I go live every week. You can call me at that number. You can send me a text message, whatever you need. Lots of ways to contact me. I want to make sure that I get you the information that you need. So with that, I am going to call it a day. I hope you guys enjoyed it. I hope I gave you information you've never heard before. I loved seeing all of the new people. And again, if today was the first time that you got a text message from me in months, that means that you never replied to my text message before. So just respond to that text with the word live, L-I-V-E, and that will make sure that you are actually getting a text message from me weekly instead of every now and again. Monarch Loans jumped on and said, I recently retired after 25 years of being an MLO. You're doing a great job. Wow, thank you so much. I do appreciate that. It always feels good when somebody else that is in the business, like Monarch Loans or even Tom Schwade, jumps in, somebody that I've worked with in the past. I love it when we can all take care of each other in this industry. So once again, if you guys need me, please reach out. More than happy to help you. Reverse mortgages are truly a really great retirement vehicle. They are awesome. They are great. They're not for everybody. It really depends on your situation. Just like we have 30-year fixed mortgages, and we have home equity lines of credit, and we have adjustable rate mortgages, and we have FHA loans and VA loans, and we have non-QM loans. We've got bank statement loans for self-employed. We've got debt service ratio loans for investors. We've got all of these products are because not one person fits into one loan, right? Every person out there has a different scenario and a different situation. And there is a loan type and a loan option that is made to fit the individual. So if you feel like this could be a great option for either yourself or somebody that you know, reach out and talk to me, and let's see if this makes sense. And if it doesn't, there might be a different option. There might be a better option for you. But I do have to tell you, I love this program and I wanted to talk about it. So I hope you guys have a fabulous day. I will be back next Wednesday at 1 p.m. I hope you guys enjoy the rest of your day. Enjoy the rest of your weekend. Oh, one more time. Serene, another question. I don't want to leave before everybody gets their answers. Can someone whose property burned down in the Eaton fire qualify for a reverse mortgage? So Serene, that is a great question. I don't know. I don't believe so. I'm going to say most likely no, 99.9% no. Somebody that their home burned down needs to get the home rebuilt. A reverse mortgage is not a construction loan. It's not a home improvement loan. It is not set up in a way that it can monitor and disperse funds for the rebuild. So I could absolutely be wrong. I will never, ever, ever say that I know everything. There's always questions that come up that I've never been asked before or looked into. But I'm going to say 99.9%. I am pretty darn sure. No, you cannot use that reverse mortgage to on a home that's not standing there, that is not literally intact. When we do reverse mortgages, most reverse mortgages are actually done through an FHA program. So if you think about FHA has, certain guidelines. So throughout this show, I've talked about how you need to maintain your property. You can't have busted and cracked windows. You can't have busted and cracked tiles. Your air conditioning needs to be working. You can't have roof leaks. You can't let your termites come in and eat up and, give you a bunch of dry rot. And the eaves of the home can't have a bunch of, peeling paint. So there's very specific guidelines to the maintenance that you need to keep on the home. And again, it's not set up to do any kind of disbursements like a construction loan or, any kind of home improvement loan. So I'm going to say 99.9% no. But if I am wrong, I will literally do the work. I will do the research. And if I am wrong, I will reach out to you, Serene. I have your contact information. So I will reach out to you and let you know. But again, okay, I'm going to close the show unless another question comes in. So I hope you guys enjoyed it. I'm here every Wednesday. You want to know when I go live? Don't miss the text message. If you got it today, haven't gotten it in months, it's because you didn't respond with the word live. You opted into my mom text message list. And I tried to start to cut that back for people that maybe were no longer really excited about mortgage lending. They already bought their house or they did what they needed to do and they just don't want to hear from me anymore. So make sure that you respond back with the word live, LIVE. So one more time, it is 844-935-3634. That's 844 We Lend for You. Give me a call. Go to my website, text the word live, opt in to know when I go live, and go to my website, mortgagemomradio.com. I hope you guys have a fabulous rest of your week. I'll be back next Wednesday right around 1 o'clock. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.